check on shares of Apple. They're off the after-hour session lows, but they are down by 3% right now. The call is underway. Loop Ventures' Gene Munster has been listening in. So, Gene, what's behind this dip?
The dip came from some confusion about the iPhone channel inventory. They talked about drawing down the channel inventory. And so what that means is that essentially that really good iPhone number wasn't maybe as good as people thought it was because of this channel inventory drawdown. And then later on the call, they just clarified their comments that while channel inventory was drawn down quarter over quarter, it was still lower than it was a year ago. I'm sorry about all these details here, Melissa, but they are important. And what that means is that there was no a game of shuffle with the iPhone to get that good number. It was a real number. That was one thing. That's why the stock kind of dipped a couple percent. And I want to quickly just highlight some other important things that have been from the call. And overall, the call has been very good. One is that the Mac business was supply constrained in the quarter. That was the only business that was just simply in line. But that probably means that there's upside to the street numbers for the March quarter when it comes to Mac. And then I want to give, I think it was Katie Huberty, some props here. I mean, she did something that as an analyst I always wish I could do. She did it marvelously, which was trying to get Tim to talk about future products. And she disguised her question about Apple Car, if Apple's working on a car, is how do you think about new addressable markets? And Tim commented that we think about the user experience is important and segments where we can do both hardware, software, and services, bring all of that together. Now, I want to be clear. I'm not putting the stake in the ground saying that Apple is going to build a car, but I think that the leanings are in that direction because the future of a car is just that, hardware, software, and services. And so when I put all of this together, I'm surprised that the stock's not moving higher. I continue to feel great about our opinion that this is a $200 stock in the next couple of years.
Gene, it's Karen. Thanks for being on tonight. Let me ask you, they talk a lot about the strength of China. Does that make you want to increase your numbers for the U.S., assuming that China's strength is on their sort of coming out of the pandemic earlier, and then when we do, we'll see that strength as well?
Yes, I think you will see analysts inch their numbers higher because of that. The question also came up on the call about these further lockdowns to your point here, and they said that they haven't seen any material impact from some of these new lockdowns. And eventually, yes, you're going to see some of that benefit. These are all what I would put as near term. I think of near term as less than 1 year. Near term benefits as people kind of right size their pocketbooks through the pandemic. But what I really want to anchor is that this quarter, the traders hit it on with the right adjectives to describe it. I just want to add is that what's going on here is an accelerating digital transformation, and that is sustainable. What's happening here is going to continue. Now, not these specific growth rate numbers, but this idea that Apple can grow much faster than I think analysts and investors believe over the next year or 2 years will play out.
Gene, great to get your analysis. Thank you.
Thank you.
Gene Munster, Loop Ventures. I don't know, Guy, in terms of what Gene had said about total addressable markets and how Tim answered it, hardware, software, and service. I mean, to me, it sounded like he could have been talking about a microwave. I get that he might have been hinting about a car, but let's say Tim Cook actually came out and said, we are looking into a car. Does that stock trade up?
Probably not. But with that, it's interesting. We don't have a microwave anymore in the house. The kids burned popcorn in it a few years ago, and we threw it out the window, and it hasn't been back since. So the experience for a microwave for me is a little bit different than everybody else. But I think it probably would have sold off on the back of a flat-out came and said car. But when you dance around it, it gives people something to think about. Again, I think the only reason the stock is low, again, my opinion, is the fact that services revenue, which were trending north of 20%, we're now somewhere between 14 and 15%. But that's just being a victim of their own success. I mean, it's an extraordinary quarter. I don't think there's any way to get around it. And Gene's right. It probably should trend higher on the back of this.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.